Welcome back to BestProp4U. Today we are doing a deep dive into Ethereum, which has seen actually an impressive rally from around the 1500 handle, which was back at the end of June, actually 2-3 weeks ago. So why is Ethereum suddenly moving? Well, after suffering a brutal, I would say, 3-quarter losing strike and dropping over 60% from its all-time high, up at 4,890 or so. The fundamentals might be shifting. We are seeing actually sustained institutional interest, with spot ETFs bringing in roughly 44 million in net inflows over just the past 2 days last week. On the network side, there are major catalysts at play. The Ethereum Foundation published a kind of expected policy guide targeting regulators and the upcoming Glamsterdam upgrade in the second half of the year, which promises massive improvements to scalability. So if you combine this with positive sentiment from major investors and increase in whale activity, Ethereum finally has the macro tailwinds it needs to push higher. So let's see what the charts are telling us on the technical side of things. It is quite obvious to see that there is a potential for a double bottom here. Okay, so let's go a little bit closer here. And that comes along with the divergence signal. So we saw the first trough down on the beginning of June, and then the second trough at the end of June. Okay, so from that bottom, price rallied, let's say, around 20% at around 1810 or so, and then started to pull back the past few sessions. The structure is kind of credible because we have this RSI divergence, right? And also the pullback the same because we have had the spike above the RSI 50 line. So this is expected price action. So the daily Bollinger Bands are completely flat, which of course suggests we might even see another leg down for a potential triple bottom before it will break out. But if bulls can break this neckline at 1850, which aligns with the upper Bollinger Band also, right? Roughly same level, then that could trigger the measure move projection, which would open the door if we even just, let's say, take the initial trough to 2,500. Let's call it. Oh, sorry, that's a bit too much. 2,160. The 100 Fibo extension means that's the measured move projection. Obviously, we need to see whether the lower time frames actually have any signals about the shorter term direction or shorter term price action. And notably, as I was just looking earlier, this neckline, let's just actually do this with a simple horizontal line, 1850, and at the bottom we could actually use that lower, the higher trough. We are sitting below, of course, the neckline, so we haven't really gotten to retest the neckline just yet. So there could be another leg to the upside, assuming we can hold 1740 or even the 1710 level, which is not just the low that we saw back yesterday, but also the lower Bollinger Band. Of course, at this stage that we are, and we are seeing this upside to 1815 or so, this really resembles, it is actually an impulsive move. So far, we don't see any corrections that go and penetrate the previous swing highs, right? So this is the typical reaction after we reach a level we peak above on the RSI, close to 80 over here, and we see a divergence, because that's the reality here. We do have a divergence, correct? So we have only dipped to 23.6. We haven't even pulled back to 38.2, which is at 1700. Not to say that bias remains upwards as long as we trade above the 50%, which is at 1665 or so. Okay, so from macro context, okay, and regardless of what the Bollinger Bands say currently, because we are below the middle Bollinger Band, as long as we are above the 50 Fibonacci, we remain biased to the upside. Okay, If we lose 23.6, the next level of course will be 38.2, but also let's not forget we have this cluster over here between 17 and 1710, because the Bollinger Band come here, previous price action comes here, okay? So a bounce from anywhere in this territory could initiate the fifth and last leg to the upside, okay, potentially 1, 2, 3, 4, and 5, let's say. We would receive a rejection initially here and perhaps come and retest that 1700 or so. And that, of course, could be the bigger opportunity to the upside for a longer term play, okay? Because it's not currently, given the corrections we see, it's not clear that we have had a 5-wave move. If we did, it would be this, okay? And we're currently seeing that correction. But if you see this correction and this correction, they just look very similar. And typically, this is not how things go when it comes to Elliott waves. If you know about Elliott waves, just remember the guideline of alternation. That means that when a correction is sharp, one of the corrections is short in a 5-wave move, the other correction is got to be like consolidating. Okay, it's sharp versus grinding, if that makes sense. So if that was here consolidation, then this 4th wave would be sharp. So that's why me thinking that perhaps we are actually now forming the 4th wave, and after that 4th wave ends, then we might see, of course, that a bigger correction that would potentially signal a much better opportunity. So down on the 1 hour to see what really the short term says, we are also flat on the 1 hour, which is not, I mean, we can say if the daily is consolidating, the 1 hour would too, but it's not typically the case. So the Bollinger Bands are here consolidated as well, and we have dropped price. Okay, it's above the median, but below the 1760. As long as we are below 1760, okay, we could get another leg down towards the 1700. Okay, that will be the first level, that major support, I would say. Now, if we manage to cross above the 1760, that could open the door to the previous high, of course, and then 1850 as well in the short term. This for me is considered so now a consolidation. You can say it's a flag. It might end up being a pennant or a triangle. It doesn't matter. But the important level to take into account here is the previous 1 hour rejection, which comes at 1740. And currently we are holding just above that level. So going down here, we could see at 1720 double bottom again, or at 1710. And we could, based on new signals on the RSI, see this providing a bounce or perhaps even a rally up to 1720, 1750. So in the very short term, we could see a drop. I repeat, the critical question is what happens when we get there. If we break lower, we're probably targeting 1700, perhaps even 1665. Okay, but if we see the bounce, we're looking at the move back to the 1850 neckline. Breaking the neckline, of course, that is the large opportunity that we want to be to partake. For bulls, to confirm this consolidation is over and assume the uptrend, price must break back above the 1 hour local or 1 hour high at 1760. So watch that level closely, trade safe, and keep an eye on those ETF flows.